Peter Schiff warns total U.S. economy to collapse. Peter Schiff has referred to the American economy as a house of cards. In his opinion, the Fed has strapped on the armor of inflation as a warrior against a deflationary headwind of falling electricity costs, declining import prices, and the U.S. currency becoming increasingly overvalued. The headwinds that this creates are nearly impossible to overcome without taking the economy into a full-fledged recession. Basically, the Fed is tanking the economy into a recession to fight inflation. There is simply no getting around this. In Jay Powell's recent comments about the U.S. monetary policy, he stated that we better get ready for a recession because it's coming soon. The government has been able to artificially keep the economy propped up for so long, but ultimately, the market will correct itself. Hi, you've reached Finance Sense, the place where we discuss all the most recent trends in the financial markets and the economy. Before we get started, make sure to give this video a thumbs up, hit the bell notification button, and subscribe to our channel so that you can stay up to date with our new videos. Having said that, let's get started. According to Peter Schiff, the Fed could only lower inflation and restore price stability by allowing the economy to collapse. One of the senators questioned Fed Chairman Jay Powell if he was prepared to go to any lengths to reduce inflation. Powell answered positively, adding, "Yes, we'll take whatever action is necessary." However, this is clearly not the case since the Fed would have already done so if they were willing to do everything. There was no reason to allow inflation to reach this level. In fact, the stock and bond markets would have plummeted if investors had believed Powell would do everything to reduce inflation. Powell was asked how he planned to combat inflation without hurting the economy or sparking a recession. For Schiff, "I can't," would have been the appropriate response. We will experience a recession if the Fed fights inflation. There is simply no getting around that. The Fed will have to significantly increase interest rates, slow the growth of the money supply, and halt the entire economic recovery. The economy was founded on cheap money, and according to Schiff, if we take that cheap money away, which we must do, the entire economy that was based on it would collapse. To put it another way, fighting inflation will only harm the economy. The United States experienced a terrible recession when interest rates were raised under Paul Volcker. But Powell informed Congress that he intended to raise interest rates while carefully shrinking the balance sheet so as not to hurt the economy. However, this is not feasible. Schiff contends that Powell must quickly halt interest rate increases, or maybe reverse them once it becomes clear that doing so will hurt the economy in order to raise rates and carefully reduce the balance sheet without negatively impacting the economy. However, neither anybody in Congress nor anyone at the Federal Reserve wants to be honest. In fact, Powell's guarantee that the Fed would take care to ensure that neither of their policies, raising interest rates and shrinking the balance sheet, hurt the economy, contradicts his commitment to do everything it takes to fight inflation. Doing whatever it takes implies that you're prepared to harm the economy and wreck the financial markets in order to combat inflation. This could only indicate that one of those two claims is false, and Schiff is betting that Powell's promise to go to whatever lengths to achieve his goals is untrue. Schiff predicts that Powell will be cautious, shift his course, and allow inflation to worsen the moment he realizes his actions are really harming the economy or the financial markets. Meanwhile, the unsustainable fiscal path that the U.S. is on was the subject of another of Powell's ludicrous statements. Powell was questioned by a senator about whether the Fed had taken into account how increased interest rates would affect the national budget. Powell said no when the senator asked whether the Fed had taken it into account when formulating its policy. Given that we are $30 trillion in debt, the cost for the government to service that debt would increase if he hikes interest rates. Powell said that they don't even consider the unsustainable fiscal path, quantify it, or model it, which is clearly untrue. Not only did Powell make that absurd claim, but he also added, "Yes, we are on an unsustainable fiscal path, but now is not the moment to act." He said the best time to fix the fiscal problems is when the economy is doing well. But earlier in his statement, he stated that the economy was not only healthy, but extremely strong. Which is it then? Why don't we address the fiscal issues now if the economy is so strong? Schiff believes that we can never resolve fiscal problems because doing so would lead the economy, which which is a bubble, to weaken. And it is simply a bubble because the Fed is not addressing the fiscal issues. Rather, it is aggravating them and accumulating more debt. Powell has said several times that because interest rates are so low, we don't need to worry about the unsustainable path we're on in the short term. But now that he has admitted that the only reason the US government's fiscal position is sustainable right now is that we have low interest rates. He is suggesting that we might raise interest rates dramatically, like what Paul Volcker did, if that is what it takes to combat inflation. However, he is ignoring the effects that it would have on the government's unsustainable fiscal position. One of the biggest problems the Fed is trying to solve is how to shrink the huge balance sheet. But there is no silver bullet that will allow the Federal Reserve to lower its massive balance sheet without crashing the whole economy, which is why they don't. In fact, according to Schiff, this is probably the reason they don't want to simulate how higher interest rates would affect the US government, since the resulting simulation would depict a severe economic collapse. So, in order to avoid having to confront reality, they will choose to ignore it rather than model something that they are certain would be a failure. The target rate for the Fed is 2% on average. Clearly, the Fed has already abandoned this goal. According to Schiff, the Fed will never attempt to average down the extreme inflation we are currently experiencing. Without taking into account prior events, the Fed will disregard the staggering increase in the cost of living and only concentrate on ensuring that the extra increase in the cost of living is just 2% per year. While this was going on, many congressmen and senators tried to blame the inflation on the pandemic, acting as though the government had nothing to do with it. Schiff claims that the US could have treated the pandemic quite differently. The country didn't have to create money and run such massive deficits. Schiff argues that the US made that decision with the pandemic serving as the excuse. Nobody wants to be honest with the American people and let them know they will pay the price for all the stimulus funds they received. Now, consumers are right to think that inflation will get worse, but they are wrong to believe that it will only get to 5.4%. According to Schiff, inflation will actually be far greater than that. Imagine how depressed consumers would be if they genuinely understood that inflation is set to grow significantly worse instead of just expecting it to get better. So, according to Schiff, there's a lot of space for this index to fall lower when reality sets in and consumers realize what's ahead of them. On the other hand, people are still hearing from the government and the media that the worst is over and that all the inflation is just because of Russia and Putin. The Biden administration frequently discusses the price hikes initiated by Putin as though the United States had nothing to do with them, absolving the Federal Reserve entirely of responsibility. Prior to Putin and Russia, it was COVID-19. Whenever they discuss the causes of price increases, they blame the pandemic, Russia and Putin, or greedy companies. In fact, Biden directly blames the oil industry for the rise in oil prices, claiming that they simply aren't pumping enough oil. Clearly, if they could supply more oil at these higher prices, they would. The notion that they are merely hoarding all of this oil and failing to sell it is absurd. According to Schiff, the Biden administration's hostility against the oil sector is one of the reasons why oil firms aren't pumping more oil. People are hesitant to invest in the oil and gas industry. They are worried about more regulations and taxes, which is one of the reasons why Schiff put more money into international stocks. Meanwhile, in contrast to the US stock market, where things couldn't be any worse, gold's fundamentals couldn't be any better. The fundamentals are excellent, but gold still has a long way to go. Because of this, according to Schiff, it should be rather evident that there is still a significant negative risk in the American stock market. At a time when the Fed is only starting a cycle of rate hikes, the underlying backdrop for US stocks remains historically overvalued. It's a long way back to normal, let alone tight. So, as per Schiff, it is incredible that the US stock market hasn't already fallen more dramatically than it has. However, that doesn't guarantee it won't. It indicates that although these investors are hesitant to acknowledge these negative aspects, they are doing so now, and they will adversely affect the price of US equities in the next weeks and months. Thank you for watching this far. Please leave a like, subscribe to help us expand our future audience, and comment down your thoughts in the comment section. This is Finance Sense. helping you keep up with all the latest trends in the financial markets and the economy. Stay safe and look out for the next video.